Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is June 6, 2022. I want to talk a couple of things in this segment. One is some buy alerts, and then number two, a review of where we are in the stock market and what has transpired. Newsflash items. Well, there's been some negative activity in the noise out there, as we can expect, interest rates, inflation, etc. But the stocks have done fairly well, and it's been a bear market rally, and some can be spectacular. Two items that came to mind was that I look at what are indicators that the economy is contracting. So two other indicators that I look at are the manufacturing index. In other words, are companies producing? Are they building inventories? Are inventories becoming excessive? The PMI Manufacturing Index, anything over 50 is expansion, anything below 50 is deacceleration or contraction. It was up 56%, I believe, up from 54, and that shows that recent, and it's a little bit of a rear view mirror, but recent activity is showing expansion. That means they're getting goods, they're building goods, demand is still there. Also, too, the last leg is really employment. Employment's been active. It was up. It was high from the report from last Friday. Once companies are talking about pulling in their horns, especially technology companies, and they are pulling back hiring. Once hiring and layoffs begin, that's kind of like the last leg. So we've got inflation, we've got interest rate changes, and now we've really got to wait for manufacturing and unemployment to kick in. If it doesn't, then maybe we'll have a soft landing. Hard to say. So that goes into, and the other thing I did see was the Fed is rolling off its, we've talked about this before, their bonds that they hold. They hold, for example, 30% of mortgage-backed securities held by the Fed. So they've been buying short-term, mostly long-term bonds. They've stopped purchasing those of recent, but now they want to, what they say, roll it off, right? So how do they do that? They, at auction time, they're not going to repurchase or buy additional bonds, and then they make the ones that they have available to the market. What does that mean? That we have to rely on other countries and other individuals or institutions to buy these bonds up. If they're not buying them up, they have to raise the interest rates to make them attractive, right? Because that's how we fuel the deficit, is by selling these bonds. So what happens is, as the Fed buys them up, they create liquidity. There's no really need to rise interest rates because they're the primary buyers or major buyer. Now the opposite is going to happen. So it actually acts as a throttle, almost as if they're raising interest rates, and therefore it should cool the economy, and the liquidity should reduce, and then that should quell activity. We'll see where it goes. There's a lot to that if you get under the hood, but that's the biggest news. It starts this week. They've got $9 trillion on the books. They're going to do $45 billion this first one, and then next month they're going to double that. So you can do the math. It's going to take quite a bit of time to reduce that $9 trillion if they ever get there. And then we want to talk a little bit about short and long positions. So we take a look, Twomey investment process. There's many. We look at the trend of the market. We know it's been down. There is a nice bounce here. How long that bounce is going to play, we're not sure. We're not in the prediction business. We just react to it. We used our technical guidelines to keep us. We have our, the trend, the macro, and the economic factors, and then we look at our sector analysis, come up with something in our hopper or blender that tells us what should we trade and how should we trade. And then, of course, we use our technical indicators as guardrails so we don't fall off the cliff. So once again, consumer discretionary is up at the top on the last 5-day, 20-day. It's showing some positive. Year to date, it's minus 23. So it's kind of been a flip. And it really is interesting, and we do have a buy in that area. Energy is now moved. It was down 4 or 5 the last couple of days, but it's resurfaced. It's up at the top. That goes with our CPG play, which is up 27%. IT, communication, industrials, and then materials round up in the top. So nothing's really changing over the last 5 to 10 days. Year to date, it really hasn't changed in what has performed, and it's really just been energy and materials. Utilities has been flat, which is what we expect, and then healthcare is kind of flat, but both we have plays and buys in those. If healthcare and utilities are very defensive, if they continue to drop, we're going to see this bear market rally to be an indicated bear market rally to continue. So that's our sector analysis. It helps. We might as well. It's kind of the bad choice of terms. We're going to get a play in the consumer direct discretionary, and we'll see how that plays out. And I still think materials and energy has a ways to go. The information technology, we did have that software play. It's up. We would be up almost 10%. We sold it for a 3% loss. Execution was that I didn't want to buy back in after it flipped in such a short period of time, just because I'm not sure where there's market going, but our guardrails are starting to tell us right now. All right, so stock buy alert and analysis. UBS is up 3.2, Nevada's down 1.2. CPG, our energy plays up 27%. ILF, a basket of utilities, 2.7. Verizon, 2.6. And this is as of close last Friday, by the way. SNY is off, but I believe that's still meeting our technical indicators. DBC, another commodity basket play, which also has the agriculture up 2.6. XLU, a little flat. AVD, if you got in, it's up 11.5. Now the buys for today, today and tomorrow, there's no. I always say, I don't necessarily. Well, let's take a look at it. TBT or TBF. Let's just take a look at it. All right, so TBF is the 1-to-1. TBT is the 100%. We do have our indicator did change, and it is back into the 10 is above the 15, and we are in a buy situation according to that. And it's time to start buying. So I would get in here if you can get anywhere between 20 to 20.2. Jump in, and then you'll have to play a big stop here. I put your stop down at 19.5. The 200, which I also played, CBT 200 is the 2 times 200% movement. That one again, if you can get in, if you choose to do that, 26.3 to 26.5, and I would put my stop down here at 24.5. This one, if we can go to the monthly, last recession, it was way up here in the 300s. I don't know if that had a 2-for-1 reverse split or not during that, but the game plan is this should continue. And if it does, we want to be in it. And if the guardrails change, when I say guardrails, our technicals tell us differently, so be it. XLY is a consumer spider fund, consumer discretionary, and I would get that in as a buy. If you can get it anywhere today from 154.5 to 156, but you should jump in on this one. Our technical indicators just flipped. It's a little tight, so if you miss it today and you get it tomorrow, that's okay. Let's see where the stop would be in this, and you'd have to play the stop down here at 147. So you have to give it some room for this to develop. I take that back. I'm sorry. Did I read that? I did read that wrong. 150.1 would be the stop if you got in. So about a 5-point lag there, if you at risk. But we wanted to see if this actually starts to develop. Relative strength index is 51, so we're in good shape there. So that's our 2 buys. Copper. Copper is I did get into that already today. Copper is the one that has changed on our technicals. We did get a confirmation the next 2 days. It's also above the 250, and it played right at the 50 today and the 200. So I believe I got in at 26.86, and I'm going to keep adding to that today and the next day. you have to have a big stop on this one, 26.2. We'll see how this plays out as well. Any other buys? That's it. Oh, MATX. This is a good one, but it's a low volume. MATX is transportation, well, it's ocean transport. So it's really transportation of goods from Asia to U.S. and back and the islands in between. When this runs, it does run, but there's two reasons. It's a very low volume stock. So you're going to be, what does that mean? If it's trading, if the bid is 92, the ask and bid is really, so in other words, if somebody's trying to sell, they're selling at 92.5, and if somebody trying to buy, they might be 91.8. So there's a bigger gap. If you want to get out, when you timing wise and you want to get out, you kind of sometimes have to take a haircut. I don't like low volume stocks. I've been looking to see an alternative to this, so if you don't get it, don't worry. But it did meet our criteria. This kind of goes to consumer discretion. Another thing, if and the PMI. In other words, if people are building things, they've got inventory to build it. Stuff's moving, tankers and truck and that are these shipping companies. They're not sitting on the coast waiting to get unloaded. So, and it's above our 200. It's repelled at the 50. If you can get in at 93.2 to 95, I would, 95 is a little high, but I would get in that, and then put your stop down here at 89. Let's see where it goes. Again, that low volume, we'd like to get a nice run. The other, behind the scenes, if you will, look here. It was up in 124 and it dropped all the way down to 84. In a 1, 2, 3, 4, 5 days, it got thrown out and sold. Many reasons for that. I won't get into it now. You can look at the news and everything else on this, but the net of it is these folks who sold here, they sold in a high volume, high hurry. They wanted to get out no matter what. See how long it took to get from, that 84 up to 124. It took a long time. It took 4 or 5 days to wipe it all out. So those people have sold. They're out of the picture. They may be watching this. They may not. And therefore, you're not going to have a lot of competition of buying because they've already sold. So you're not going to run into people selling. See how there this was flat. I don't know if you can see my crosshairs, but from where the low and to where it is today, it's kind of equal bottom, equal above the blue line there. So basically the same amount of buyers and sellers every other day. Not a lot of big change. So now you have to compete against these buyers and sellers. So it's a flat line, and it went on for quite some time. And therefore, every time you're buying, somebody's selling, vice versa. Right now, you're going to buy, and folks who are in it who didn't sell, there's really not until you get up to 105 are you going to get some of that. Where people, if they held on to it and they're like, oh, I got to get out. So I think you get a little bit of a run here is what I'm trying to say. The relative strength index is making me a little scared. It's at 60. It's near overbought is 70. But it's I like this play. I like this sector, and I want to get in it. What else? Okay, so we talked about that. I just want to do, and I want to get this posted. So I want to do Amazon. I just bought that. It split, so it's I forget what the split was, but it's now at 126. It's way up like 4 points today. It did hit a buy signal now with the whole conversion. With our technicals, it is reaching over. It's 57%, 57 in the relative strength index. So there is some high buying volatility is there. There's chance of volatility is reaching there as it gets near the overbought 70. But with that said, I'm in it. I don't like to buy splits the day of. Splits really don't. It's not like you're not really getting more value. It's just there's more shares. The shares are cheaper and they're more available, if you will, than paying $3,000 for it. So that tends to give more people opportunity to buy this that normally wouldn't, because how many people can buy $3,000, $4,000, $5,000 worth of Amazon? That's 1.5 shares. So here you got a chance to get in. A little bit of a risk, because I don't believe that the market is telling us too much just yet, but I would get in it. Our indicators say you've got a gap forming up here from that 131 to 136. If it reaches that gap and goes above, you got a free ride up until this point up here, which would be 145. The only thing is it is bumping up against the 50. It is bouncing off that. So if you don't get it today and wait till tomorrow, no big deal. But there you go. So Amazon wasn't on our list, but it is a buy. The ETFs. All right, SPY. SPY has told us to buy. I didn't issue a buy order. We got confirmation. The technicals did that. It's bumping, just like Amazon. It's bumping up against this 50. Makes me nervous. In theory, we should be buying, no doubt. The Twomey investment process, the principles and the technicals, the relative strength index is 52, not overbought, not in 65, 70. So indication is it should have room to grow. I'm not convinced. Why? My bias is taking over. This is the problem in traders, that when you believe something to the point where you make mistakes trading. I'm willing to wait another day or two. I wanted to issue a buy signal Friday. I held off. I was thinking about doing it today, getting a starter position. I'm going to hold just one day. I want to see where this goes. The short end of this, let's take the short end of it. It definitely was sold. I've kept the third. I've maintained a third. I added a little bit to it today. I'm not saying buy, because our indicators has confirmed to get out of it. Should, in all intents and purposes, have sold our last third. Okay, so there's no reason to hold on to it. You can always get into it. It is the 200 EMA is holding it up, but it is getting repelled by the 10 EMA, which is below the 15. The relative strength index is 46. 30 would be oversold. So we're not oversold. It's not like, hey, oversold, overbought. Let's go over that one more time. If a stock is indicating it's overbought, or an index, the SPI, overbought or oversold, okay? So if it's oversold on the short side, that would mean there's not any more sellers on the short side, right? It's oversold. Everybody who's sold has gotten out of it, in theory. So there's a chance more buyers are going to start coming in, right? And then if that's confirmed, if the SPY changes. Now the SPY, the long version, is not overbought. When it does, that's a 70 kind of number, which would have put this up into quite some higher numbers here, right? What does overbought mean? That means everybody that's thinking about buying the SPY have bought. There's not a lot of buyers out there. And then if you want to sell, there's not many takers, right? So that sets the story for the floor to fall out. When you go into a store and it's empty and nobody's buying, what do the retailers do? They start running sales and they start saying, hey, this stuff's not moving. I got to get rid of it before the end of the season, right? Same kind of philosophy. But with that said, not much change here. Let's look at the diamond, which is the Dow, and that is same story. All intents and purposes, we've got confirmation and we should buy. This one kind of trying to eke its way above the 50. It hasn't. I'm still waiting on that. And relative strength index is not saying anywhere near that it's overbought. So, and the short of that is dog 1-to-1. It same as the short of the SPY. It's being the 200 EMA. It's kind of hugging that. All intensive purposes, I've got a small position left there, but all intensive purposes, if you're a third, you should have sold and got out. So tomorrow we may have to go long, but we'll see. I'm not even going to go over let's go over the Qs, Q. That is the same story, just not as strong. It's really kind of touching. And then the same story, it's below the 50. We'll see. It's going sideways. I don't have a problem with it going sideways. Sideways sometimes good. It gives everybody a breather. There's buyers and sellers are equal, and there's no strong conviction. I'll look at the advanced decline data to kind of give me an idea where things are going. I'm in no rush to jump to the long side just yet. Okay? But if you did take a position, just be careful. And, our indicators say do go long. The Qs, the SPY, and Dow. We'll see. This is a short of the Nasdaq. It's being repelled at the 50. It's well below the 10, and it's below the 15. So everything indicator says you shouldn't be holding that either. So that tells us: is this a bear market rally, or is this the real deal and things are coming back? I'm going to wait before I make that purchase. And if I do go long tomorrow, sometimes you just have to say, hey, I got to jump in. I'll have a tight stop on the long side, and I'll probably take a smaller position than normal. In the meantime, our long positions aren't playing out the way we expected. So this is James Twomey. If you have any questions, jim.net, search at comcast.net. Be happy to help you out. Make sure you like and subscribe. The subscribe, really, that's so you get these alerts that I'm sending out now in a timely fashion. Have a great day, and the best if you're trading, and if you are trading in the stock market, it's really simple. You just want to make money. So we don't want to take excess chances in a trend that is still down. We got to get convinced. Our technicals are telling us to buy long in certain areas. We've started nibbling at some longs in sector areas that tell us that are strong. Some are short term, some are long term. We've got enough to give us a start. If it does flip, we'll get you out an alert. Thank you very much. Have a great day.